In a surprising turn of events, stock futures have shown a slight uptick following the Federal Reserve's recent decision on interest rates. This development has sparked interest among investors who are keen to understand the implications of the Fed's actions on the market. On Wednesday, futures for the S&P 500 and Nasdaq 100 both increased by 0.2%. Meanwhile, futures associated with the Dow Jones Industrial Average saw a modest rise of 50 points, translating to a 0.1% gain. These movements indicate a cautious optimism among traders as they process the Fed's latest rate cut. In after-hours trading, shares of Cracker Barrel Old Country Store experienced a significant drop, plummeting over 9% after the company reported fourth-quarter earnings that fell short of Wall Street's expectations. The restaurant chain is now focusing on improving the guest experience following a controversial rebranding effort that has drawn mixed reactions from customers and investors alike. The fluctuations in the market come on the heels of a turbulent trading day, where the Fed, as many had anticipated, reduced its benchmark interest rate by a quarter percentage point. The Dow Jones Industrial Average was the only major index to gain ground, climbing 260.42 points, or 0.57%. In contrast, the S&P 500 and Nasdaq Composite saw slight declines of 0.1% and 0.33%, respectively. During a press conference after the Fed's decision, Chair Jerome Powell tempered expectations for a series of aggressive rate cuts, describing the latest reduction as a measure of risk management. While policymakers are forecasting 2 additional cuts this year, they predict only one in 2026. This outlook contrasts with traders' expectations, who had anticipated 2 to 3 more cuts in the upcoming year. Gina Bolvin, president of Bolvin Wealth Management Group, commented on the situation, stating the Fed's 25 basis point cut is a clear signal. The softening labor market and persistent inflation have compelled policymakers to act, but in a gradual manner. This isn't a pivot, it's a carefully measured step. She further noted, for investors this translates to modest relief in interest rates rather than any dramatic changes. The Fed is navigating a delicate balance, and forthcoming data on inflation and employment will be crucial in shaping future decisions. Despite the losses observed on Wednesday, both the S&P 500 and Nasdaq are still on track for weekly gains, with increases of 0.2% and 0.5% respectively. This positions the S&P 500 for its 6th positive week out of the last 7, while the tech-heavy Nasdaq is aiming for its 3rd consecutive week of gains. In the meantime, the Dow's upward movement this week has brought its total advance to 0.4%, suggesting it could achieve its 2nd consecutive week of gains if this trend continues. In a more detailed look at Cracker Barrel, the company's shares fell sharply after it reported adjusted earnings of 74 cents per share, which was below the anticipated 80 cents per share, according to analysts surveyed by LSEG. However, the company did report revenue of $868 million, surpassing the consensus estimate of $855 million. Investors were also disappointed by Cracker Barrel's full-year guidance, which projected revenue between $3.35 billion and $3.45 billion, falling short of the $3.52 billion that analysts had expected. Additionally, the company anticipates a decline in same-store traffic of between 4% and 7%. The decline in Cracker Barrel stock follows a challenging month, exacerbated by the backlash from its rebranding announcement, which has contributed to a more than 20% drop in shares over the past month. Although the stock saw a brief recovery after the company decided to revert to its original logo, it remains down over 6% for the year. As we look ahead, the stock futures opened positively on Wednesday evening, with the Dow Jones Industrial Average futures rising by 34 points or 0.1%, SP 500 futures also saw a slight increase of 0.1%, while Nasdaq 100 futures gained 0.2%. This situation raises important questions. How will the Fed's cautious approach to rate cuts affect the broader market? Are investors prepared for the potential volatility that may arise from upcoming economic data? We invite you to share your thoughts and opinions in the comments below.